This is Hillary Kramer. We are at the Money Show, and we are in San Francisco, August 2018. I'm here with Jon Markman with a very important question. But first, let me introduce Jon. Jon is the publisher of Tech Trend Trader, Strategic Advantage, and he has 6 other publications, and you can also see his writing on Forbes as well as on TheStreet.com. Jon, welcome. What are the subtle signs? How do we know as an investor that this market might be tipping over, turning over, and the bear could take over from the bull?
Okay, that's a great question. Well, number one, there are so many people asking me if the bull market is over today that it just can't be, right? It just can't. You won't really know what's happening when it's happening. You have to remember that bull markets end really, really slowly. It's like they usually end like a big dome. So, you know, when you look back, let's say 6 months from now, or 9 months from now, and you can see a peak, that means that there's a possibility that the bear market has begun, although you really won't know it even then. But don't forget, you must look over your shoulder, and at least 6 to 9 months before you're going to see a peak, all right? In my view, the most important single tell for the start of a bear market is when the S&P 500 monthly bar ends below its 12-month moving average. So if you look at the stock market not in minutes or days or weeks, but in months, you look at monthly bars and do a 12-month moving average. If the market falls below the 12-month moving average at the end of a month, then you're probably in a bear market. And that's when you should sell.
Okay, so you really believe in the chart. In addition to looking at the chart and the strength of a market, relative strength.
Charts reflect prices, but prices reflect psychology. So what we're really looking at is a psychograph of the market. You're looking for the time when sentiment has gone from positive to negative. And you don't want to do it too early, right? Because there's lots of times when the market kind of tips over, kind of has a day off, kind of has a few months off, kind of goes flat for a while. Those aren't bear markets. Bear markets are when sentiment really collapses. And the best way to capture that, one of the best ways to capture that is in a very, very simple way, is to look at the 12-month moving average.
Okay, so where are we right now, Jon?
We're at a new high. So
okay.
It's not happening now, and if my calculations are correct, my personal opinion is that the S&P 500 will go to at least 3,330.
Oh, well, that's music to my ears and to every investor. So
it's about 16% higher from here.
Okay, so that's perfect. That would be wonderful. Where should an investor really be focused in terms of sectors in order to capture that 16% and beyond the 16% side?
You know, this entire bull market since 2009 has really been focused on growth stocks, and it has been focused on technology and healthcare. And I think that those are the places where the most innovation is being made today, and those are the places where investors are most willing to pay up for growth.
Okay, so that's where investors should focus. Jon, thank you so much. We appreciate your being here today.
Great to be here.
And we are at the San Francisco Money Show with Jon Markman.